What's looking the weakest is the Hong Kong market. It's down over 2%.
I think we have overcome interest rate risk and inflation risk.
Government will sell its 4.65 crore shares in Axis Bank. That translates to about 1.55% stake in the bank.
The first stake on the index is down about 0.5%.
Indian earnings season, from what I gather, has been a mixed affair. You had pretty decent numbers from some of the private sector banks early on.
The revenue was largely in line with expectations. It was flat on a year-on-year basis. The street was working with that, with a growth of around 11% on a Q-on-Q basis.
Face slowing global growth and a tightening global monetary landscape on high generalized inflation, what you're seeing in the advanced economies, having their material headwind for growth.
A sharp fall on the stock today, and that is because the numbers were really weak for the company, and it is a continuous decline that we are seeing in performance as well quarter on quarter.
The Nifty sold off about 125 points as we speak, but still holding on to that 18,000 mark.
Expectation was that there could be a profit this time around, so that is a bit of a disappointment.
Going forward, we think things should only pick up.
Last 3 days, we've seen a constant decline come into these markets. The global market capital is now below $1 trillion. Bitcoin is trading at a 2-year lows, and Solana clearly has been the most hit cryptocurrency, down by 45% in last 24 hours itself.
Surprise Democrat performance in the U.S. midterms hurt the world markets.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, there's a match going on here which the Bulls are losing, but there's another match going on which I think is at an important stage. I think 3 wickets down, and let's hope that here the Bulls make a comeback, and there, the team makes a bit of a recovery as well, recovery gains in that sense. We'll get to that in just a bit, and we've got something special lined up for you in terms of the cricket match as well a little later. Let me quickly tell you where things are at in the market here. So we've been down from the word go, and that continues. The big driver, and we were talking about this in the morning, is of course the US inflation number. So this was a bit of a do-nothing kind of day. And I think it's kind of panning out like that. We're down 0.8, 0.9%. So it seems, compared to the kind of markets we've been in, a little sharp, a little deep. But things could turn on a dime. Be mindful. The number will be significant. Be it a beat, be it a miss. I would even say if the number is in line. I mean, that is also perhaps will be closely watched. On the dovish side, if it's in line, I mean, that's good news. Core inflation is expected to rise about 0.45%. So that's broadly what the consensus, where the consensus really is at. The dollar index is, lost a little bit earlier in Asia after being higher overnight. So we are still at about 110.43. Advances to declines ratio is negative 2:1 in favor of declines. Autos, public sector banks, and consumers are the 3 areas which are seeing the maximum pullback at this point in time. I think we can talk about levels, etc. But because you've got this big data point, and the moves can be large later, we'll leave it for tomorrow morning before we start. For now, I think all eyes on that later in the day. Rima.
Hi, Prashant. Hi, Nigel. And we've had 2 leg downs in the markets, right? Pull up the intraday chart. First, we had a weakish start. Then a big sell-off happened close to about 12 o'clock. But for a greater part of the trading session, we were holding on to that 18,000 level. Just in the last few minutes, even that level has gone. So right now, it's 165 points down on the Nifty. The sensex lower by 550 points. One of the levels to watch will be last week's intraday low on the Nifty, which is about 17,950 thereabout. So let's see whether we can defend that. To be precise, it's 17,595, which will act as a support. It's the weekly options expiry that will also play an important part as the last 1 hour unfolds, and we've seen some very sharp earnings reaction. So Aurobindo Pharma came out with numbers before, but the stock continues to tumble. ITD Cementation, Piramal Enterprises, Team Lease, these stocks are falling on very, very large volumes as well, Nigel.
Well, that's right. Last 1 hour is going to be exciting. Hopefully, India gets, to a reasonable target. And let's see how the expiry plays out. Because today is the weekly expiry, so expecting a fair bit of volatility as well. Now, I'm looking at the options data. The 18,000 call and the 18,050 call. Well, they are seeing very, very aggressive writing in today's trading session. That's why in any kind of bounce, you are seeing some selling. And the resistance, they're playing for an expiry not above that 18,050, 18,075. That's what the bears are looking at. On the downside, though, there is some support at around 17,950 to around 17,975. I say this because last week we bounced off those levels, Today as well, we are seeing some bit of support at those levels. And writing continues at around that 18,000 put. We haven't yet seen any kind of unwinding out there. So the crucial marker, just a few minutes ago, actually, we went down to around 17,965 odd. And from there, we saw a bounce. So just keep an eye out on that mark. For the time being, the bulls believe that can hold out. A break on any of these levels, well, it'll take us up either 50, 60 points on either which direction. So let's see how things are. But as of now, the bulls are playing for that 17,960 odd level, holding out. Back to you guys.
All right, let's take our viewers through what we've lined up for them on Closing Bell today. Tata Motors crashes on a big miss in earnings and cash flows, higher debt and a cut in guidance by JLR. What are the brokerages saying? Details lined up on the show. Lupine leaps on beating street expectations and margins, but Piramal Enterprises and Deepak Nitrite slide after results disappoint. Complete analysis on the show today. And big nifty earnings. Aisha Motors, Apollo Hospitals will be reporting numbers today. We get you the key expectations. And ahead of MSCI semi-annual review, what stocks are set for inclusion and exclusion. We bring you those details on the show. We'll also take the discussion forward on the markets with Vinay Jaising of GM Financial Services later on Closing Bell.
Okay, so that's the lineup here. But after the stake sale in Axis Bank, this shares in Suti, there were a lot of concerns whether the government will sell shares in ITC as well. Sapna is joining in. She's got some clarity from government sources. Sapna, take it away. Good afternoon.
Hi. So what we have heard very clearly at the moment is that absolutely no plan or no thoughts of any kind of a residual stake sale in ITC. If you recall, way back in February 2017, the government had offloaded some stake in ITC, that is a Sudi undertaking. And currently they continue to hold close to 8% in ITC, valued somewhere around 34,000 crores. But what we have been clearly given to understand is that nothing is there on the cards as of now, any thought process on that front. However, I'll just add a bit of a caveat here, Prashant, because, OFSs are something that the government will never talk about in advance. What we can only talk about is the current status. Currently, the clarification is ample that there's nothing on the cards. But if something happens in the future, that's something that we cannot talk about right now. So at the moment, nothing on the cards, but need to be alert.
Okay, all right. Thanks a lot for that, Sapna. So, Sapna, clearing the air with regard to ITC. But how do you position yourself in the final hour of trade? Mitesh is back with us. Mitesh, how do you see this expiry play out, and what about a couple of trading picks?
Yeah, good afternoon. I think, earlier in the day, I spoke about the fact that this could be slightly deeper a cut and a pullback because the hourly charts were slightly negative with yesterday last hour fall. And that is played out. We looked at 18,000 as the first level, but we have not got any significant sign of a bounce back from there. So I think it's very likely that 17,850 could possibly be tested in the short term. So I'm not going long here. In fact, I have two sell calls, both from the fertilizer segment, GNFC. That's a sell with a stop at 685 for targets of 640. And Chambal Fertilizer is a sell as well. Keep a stop about levels of 306, 305 half and a target of around 285 on the downside.
Okay, let's talk about Lupine. That's surging in trade after margins and US sales show a recovery on a quarter-on-quarter basis. Ekta is joining us with the fine print and what's gotten the street so excited. Ekta.
Well, definitely a Q-on-Q recovery which is coming for Lupine, and that is really what has excited the investors because the company had reported what was a very dismal Q1 FY23, but they had guided for a recovery in the US business as well as the margins, so they have come through with that. But in terms of the revenue, it was largely in line with estimates. The street was estimating a flat performance, so they came through with that. Margins were at 11% this quarter versus estimates of 10.7%, so it was in line with estimates, and it improved from the levels of around 6% that they had reported in the previous quarter. Separately, the US business recorded revenues of around $159 million. The street was anticipating around $155 million, and this is versus a low of around $121 million that they hit last quarter. So there has been a recovery which has taken place in the US business. India was sluggish, so India was just about higher by around 3% It did underperform because of their diabetes portfolio this quarter, and largely profit was also below estimates estimates, but the street was squarely focused in terms of the margins as well as the US market recovery. Going forward, a couple of triggers which the street would watch out for Lupine would be sustaining the margins. The company said if things go well, they could probably stick to that exit run rate of around 17 to 18%. US margins, US revenue rather sustaining at these levels and probably going to $200 million with important launches in the pipeline, such as Spiriva generic and inhaler, which is slated for the second half.
Thank you very much for that, Ekta. Devin Choksi of KR Choksi Securities is also with us on the show. Devin, now Lupine has been a big underperformer. Earlier, there were concerns about US sales slowing down, FDA, etc. So consequently, if you look at the performance in the last 1 year, Lupine shares are down 25%, while peers like Cipla, Sun Pharma are up nearly 25%. So it's been a rank underperformer, nearly 50% underperformance versus some of its peers in the last 1 year. Given that Q2 is showing you, a pretty good recovery in the US sales and some of the triggers that Ekta spoke about, is it time to look at Lupine?
So I think good afternoon. But importantly, in the North America sales, I think the improvement has been seen in this particular quarter. And I think that is possibly the reason for which I think a relatively better performance for sure, because 2/3 of the business I think comes from, 1/3 of the business comes from America and 40% comes out of India and rest from the other parts of the world. So obviously, I think any meaningful improvement in America business, I think definitely is reflecting well as far as numbers are concerned. A couple of questions would be that whether this is sustainable. Now, going forward, I think a couple of inhaler brands that they have acquired, I think that could possibly bring some amount of sustainability as far as I think the margin outlook is concerned. But beyond that, I'm not too sure how much I think it will be sustainable. Maybe I think a couple of more quarters, but we'll have to wait and see. The likes of Cipla, likes of Sun Pharma, who have been overly focused on the complex generics, I think they are relatively better placed because of, I think, comfortable outlook on the realization and the margins. And at the same time, I think the growth continuing from, I think, the American economy, I think much better for them because of the portfolio of products which are, I think, in the specialty generics or complex generics that they have been marketing.
The other one is this news flash at the bottom of the screen. They were just coming to you. Aurobindo Pharma essentially saying that P. Sarath Chandra Reddy is not in any way connected with the company's operations. So that is the clarification. I'm not sure how much it will do for the stock, or the company saying that in terms of running of the operations of the business, Mr. Reddy is not connected in any way. We're seeing a slight attempt at a bit of a bounce back, but really, I mean, 12% is a very large cut that we've got going at this point in time. The other one is Piramal Enterprises, which is trading with sharp losses. It's reported a massive loss in the second quarter, and the provisioning has jumped quite a bit once again. So pain is there for everyone to see. Abhishek is here to tell us more about the numbers. Abhishek.
Well, Prashant, as you mentioned, it's reported a massive loss of more than 1,500 crore as stressed assets have weighed on the performance. So provisions are at more than 3,300 crore, which compares to 122 crore in the previous quarter. This is on account of the fact that almost 5,900 crore worth of, assets have moved from stage 1 to stage 2. So that is overdue of more than 60 days from the earlier overdue between 30 to, 60 days. So management has mentioned that some of the stage 2 asset can deteriorate and become NPA, which is the stage 3 part of the asset, or loans overdue of more than 90 days. Retail disbursements were strong, up about 21% YOY. However, due to massive decline in the wholesale book, the overall AUM has declined by 4.8% YOY and about 1.25% on a sequential basis. We have CLSA who has written a note on Piramal Enterprise. They have downgraded the stock to underperform from buy and cut the target price to 900 from 1170 earlier. They say that another big provision has hit on the wholesale portfolio. So overall, in Q2, they have made a provision of 3,300 crore, which compares to 1,100 crore worth of provision that you saw together in Q1 and Q4. So worst may be over, but how the investors will take it is not clear. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Stock clearly taking a bit of a knock as we speak. Well, for the markets, we're still holding below that 18,000 odd mark. We attempted a bit of a pullback, but that got sold into. So let's see whether or not we can get above that 18,000 odd level. Then maybe some of those call writers will be forced to cover out. Others, in fact, it appears the bears are pretty much in control. Slip in a short break, you come back, and we'll take the discussion forward on markets. We'll have Vinay of JM Financial Services who will be joining us to talk about his approach to the market and various themes that he likes.
Welcome back. Today, all the attention is on the match. So let's turn our attention to what's going to be happening post-market hours, and that's let's turn our attention to what's going to be happening post-market hours, and that's big numbers which will be expected from the likes of Aisha Motors. Sonia is standing by to give us the expectation. Sonia.
Well, thanks a lot for that. So, for Aisha Motors, the Hunter, which is their new launch by Royal Enfield, has done exceptionally well, and that will reflect in the numbers this time around. We're expecting very strong earnings in Q2. The domestic recovery is aided by not just the success of the Hunter, but also the improvement in the semiconductor supplies. And that, along with that, there's also a ramp up in exports, which has done very well. The price hikes that the company undertook and the operating leverage is something that will result in positive margins for Aisha Motors. The Royal Enfield volumes were phenomenal this time. It was a growth of almost 70% year on year, and that will lead to a 60% growth in revenues. EBITDA will go up 82.3%. Margins will improve to 24% versus 18.4%. Now remember, 18.4% last year was extraordinarily low because you had the semiconductor supply issues, production issues. Steady state margins for Aisha have been in the range of 24-25%, and now that normalcy will return. Profits expected to go up by almost 81% on a year-on-year basis. The commercial vehicle business has also done well. So all in all, it's going to be a smooth ride for Aisha this time.
Indeed, it is a smooth ride. Sonia, thanks a lot for joining and giving us a quick preview on that. But Apollo Hospitals, they'll also be coming out with a set of numbers. Ekta joins us to run us through the key expectations. Ekta?
Well, yes, Apollo Hospitals will be releasing numbers post-markets. There's been a lot of focus in terms of a lot of the hospital companies because of the kind of occupancy improvement that we've seen, especially post-COVID as electives pick up. Now, revenue is expected to grow around 6% this quarter. Margins will probably come off on a year-on-year basis and profit of over 200 odd crores. Year-on-year, the numbers are expected to come off because it will be on a high base. Same time last year, hospitals did benefit from vaccine revenues as well, which was over 200 odd crores same time last year, and hence there should be some amount of come off because of that high base. But separately, the occupancy should probably stay above 60%. There could be an upswing in the occupancy simply because of the kind of seasonality that we could see this quarter, higher amount of viral load, etc. Then we would also be watching out for the medical tourism, because medical tourism is slowly picking up, and that should probably benefit hospital companies as well. How much is it as compared to pre-COVID levels is something that the street would be watching out for. Margins likely to come off because of a high base, single-digit pharmacy margins, and probably the performance of Apollo Health Co, which houses Apollo 24/7, the online digital arm, and that has been under pressure in terms of the bottom line as well as the increased investments by Apollo. So that funding as well as incremental investments in Apollo 24/7 would be something which will be closely monitored in terms of commentary as well. Diagnostic business, how it does, it's a part of the Apollo Health and Lifestyle business, will probably see some amount of growth simply because it's a newer business and they are quite aggressive on it.
All right, Ekta, thanks a lot for giving us a quick preview on that. Well, Deven is still standing by. Deven, I wanted to ask you about a couple of these real estate stocks. Godrej Properties, well, it's doing pretty well in today's trading session, but Oberoi Realty are under pressure. They put out a release that they're going to be buying out a stake in this Worli project from their JV partner for around 4,000 crores odd. The street doesn't like that because there's no further details. How many flats are they buying? What is the cost per flat? We don't have all of those details, but it's been one of those preferred real estate stocks. How do you approach either of these two? What's the preference between Godrej as well as Oberoi? Godrej, by the way, has seen a sharp correction from the peak.
Yeah, Nigel, I think in case of Godrej, definitely they are trying to suggest the visibility of a higher amount of bookings that they are doing. And possibly they are confirming that by the end of this year, I think the total amount of revenue visibility under the bookings, I think, would be around 10,000 crores. So that probably, I think, goes well. Along with, I think, the newer launches that they are having, They have already year till date, I think, given, I believe, somewhere around 6 projects, I think, visibility for the launch. And I think the Pune project recently they have talked about. So certainly, I think the visibility part is not doubted. In the near term, I think you might possibly see some amount of muted performance, largely because of the fact that when you compare with the last year's revenue, which they booked in the similar quarter, I think this year's quarter, I think the revenue has been slightly muted. And I think if that is so, then some quarters could possibly show little muted performance, which would be accelerated in subsequent quarters. In this kind of project-driven business, that's a very normal way of looking at it. So quarterly basis, one would not like to look at the company. One probably looks at the company from the horizon, I think, under which they are operating 2-3 years' time for delivering of the project. I think in Oberoi is also the worldly property. I believe that I think should be giving them relatively higher amount of what you call revenue and the profits because of the better prices that I think it commands. I'm not too sure about, I think, the valuation at this point of time, so would refrain from putting a view on that. But in general, I think the real estate business, I think, is showing a steady pace of growth. That is for sure.
Devin, it's a pleasure as always. Thank you very much for joining us and running us through what you're making of things right now. I mean, it's pretty steady. It's down but steady. It's not seeing incremental moves. 170 lower at 17,984 right now. Now, MSCI index review is always closely watched. There is a lot of activity which happens in anticipation of which are the stocks which are going to come in, weight change, move out, etc. And then the list is announced. By the way, the list is going to be announced for the next set of changes today. And of course, then there'll be an effective date of these changes, which is going to be some time away. Vivek is here with the key expectations from the markets. Vivek, over to you.
Well, that's right. So the all-important MSCI semi-annual index review is what is in focus. So the list of changes would come to us, early tomorrow morning. So November 11th morning, you will have the list of inclusions as well as exclusions from the MSCI. Two indices, the MSCI Standard Index and the MSCI Small Cap. So the MSCI Standard Index is the one, that holds more weightage and is more closely tracked as far as analysts are concerned, given the high tracking or the high passive funds that actually track this particular index. So adjustments will take place on November 30th. Now, Morgan Stanley estimates that almost 8 names will be added to this particular, in this particular date or the inclusion date. And when you're talking about the cumulative inflows, over $1 billion of inflows is what is anticipated in this particular index review. So the names that are likely inclusions: Hindustan Aeronautics, almost $129 million worth of flows expected. Bajaj Holding, over $136 million. ABB India, Bank of Baroda and Varun Beverages are some of the stocks that are likely to make the cut this time around. Some of the stocks that would migrate from the MSCI Small Cap Index to the MSCI Standard Index include Tube Investments, TVS Motors and Canara Bank. So these names would definitely be in focus tomorrow. Now, also another stock to keep an eye out for would be Zomato. Morgan Stanley estimates that Zomato could see a significant weight increase that could lead to inflows of over $167 million. So another name to keep an eye out for. And an outside chance is Indian Hotels. IIFL Alternative actually expects this particular stock to make the cut this time around. Inflows of almost $182 million is anticipated. On the other hand, IGL and Biocon are the stocks that are expected to be excluded from the index this time around.
Okay, all right. Thanks very much for that. I mean, Vivek, the bottom of the screen, latest updates from the match which is going on. Kohli is out after scoring fabulous 50 runs. So that's the 4th wicket which is gone. I think we need just one big over, right? Not
We've
many
got
left now. 2 left. So we got one. We need one really big over for us to put a sort of formidable score in front of the opponent. So we'll see. But Vinay Jaising is with us. He's Managing Director, Portfolio Management Services at JM Financial Services. Vinay, great to have you with us here. Thank you very much. Just a quick word to begin with on, I'm looking at what you own and what you like. Right, across the board, Make in India theme, IT services, FMCG. So in the Make in India theme, just your thoughts on HAL, Hindustan Aeronautics, which I think you do own, you do like. Where are valuations at for HAL, Vinay? And would you assign the same kind of valuations that capital goods companies get? Because if you look at capital good valuation, they are far higher than defense manufacturers, especially the likes of ABB, Siemens, etc. Because the industries are broadly overlapping, right? The same kind of industry structure. Go on.
So thank you so much for this question. When we looked at the defense sector first, we thought it could be a secular growth part of our business. But that's when we realized that what the Indian government is trying to do, they're trying to make more and more of manufacturing come into the country, replace them from what was being coming in from the rest of the world into the country. So what that would do is, that would reduce our import bill and the dependency on the country would increase. So our perspective, why do we like Hindustan HAL? First reason, good growth, of what they are doing in terms of the overall supply of planes. Second, more importantly, Tejas is doing very well. Third, India's manufacturing, the government's mandate to manufacturing increase in the country would lead to higher ownership for the Indian manufacturers, up from 25% to 40-45%. So two trajectories: as the Indian pie of defense grows, HAL grows. Second, as the India manufacturing space increases and as Indian planes are made more and more, HAL gains further. In terms of valuation, the stock is at 1 year forward multiples of 2022. For me, it's not the growth of 23 or 24, which is tepid, but as our analyst tells us, the 25-26 growth would be even much higher at 15 to 20%. So this leads it to be a core owning in our sector. Moving to your second question of capital goods, I clearly believe the valuation of this company can be a lot better. It could be sporadic because the government could give them orders every 1 to 2 years, but they have an order book for the next 3 years already filled. But when it comes, people will keep on raising earnings estimates. And for me, it's a better way to play the industrial or the capital goods sector, which is why we like Hindustan Aeronautics.
Vinay, afternoon. Rima here. Just to get the big picture in, it appears that the uncertainty related to China slowing down or the peak Fed hawkishness is largely in the price. We've been talking about it all over the world for the last so many months now. The earnings season is largely behind us. What are the triggers the market should be sensitive to from here on?
So two things, when we say it's in the price, there's something which our macro analyst showed us just yesterday. His point was, if you look at MSCI India in rupee and MSCI India in dollars, MSCI India in rupees is up a bit and MSCI India in dollars is down about 5 to 8% in the last year. So you've seen a 12-13% plus dollar appreciation. The rupee has moved from 70 and change to 82. So when we see even the index at 18,000 levels, if you knock it off for the foreign investor, you're probably at 16,500. So we largely agree with you that, the markets, not just world over, but India, though it's flat, foreign investor, it's as good as being down 14-15%. What to look out forward? Again, back to what US is doing. US is doing a 3-point strategy. First, it's hike rates at the fastest ever rate, which we've seen in the last couple of decades. 400 basis point increase in the interest rates. That's unprecedented. All of it, in a very short period of time. Now the question is, the next rate hikes could be slower, but there are rate hikes. If earlier analysts or economists felt that number of interest rate could be, peaking at 5%, they could probably look at it peaking at 6%. That makes the US currency also, a lot more attractive compared to the Indian currency. The second is, even when you reach that rate, how long will that interest rate remain at that level? And that's where you get pain or slowdown in US coming in. And the third trajectory really is, when does it correct? So you've got two trajectories left, for the market to see and test. And these days, this will only be seen when you see earnings cut, both for the economy as well as of sectors. So, the world is undergoing 6 months to 12 months of pain, because that's when this whole story would unfold.
Hi, Vinay. I wanted to ask you about the two big themes, the pillars of the market, the IT space as well as the banking space. You have been relatively cautious on the IT space. You have some exposure to Infosys, but I think the overall stance was you're cautious. So are you sticking with that? And also you have been buying private sector banks. But what about the PSUs? They are the ones that are really moving. Have you allocated any money to the PSU banking space that valuation-wise have some comfort?
Sure. So let's look at all these three questions, actually, not two, which you said. But first one, the IT space. We are underweight the IT space because of the same comment I made earlier. The interest rates in US have moved up. The 2-year chart today is at about 4.6% for US as compared to the 10-year chart, which is at 4%. So there's a negative interest rate between the 2-year and 10-year chart, which means there's a lot of pain in US in the short term. When this occurs, what we typically believe is in the next 6 to 12 months, you'll see a slowdown in the orders given by the global corporates to the IT companies, and you could start seeing earnings getting downgraded. So we're sticking to that stance of being 50% underweight in the IT space. We like the dollar play, which is why the Make in India becomes a lot more important. Wherever you have those companies where you're getting exposure to the dollar, but having raw material coming from the country. Second theme, banks. If you look at the loan book growth of banks, every month it has been inching up. Today it's close to 18%, similar to last month, 17.9 to be precise. Now that number is fantastic. If you compound it, you're saying in 4 years, you're going to have the loan book growth doubled, right, from today's level. Having said that, the interest rates also for India are moving up, but not as fast as the rest of the world. The capital adequacy ratio for the big banks in India, or the private banks, are between 18 to 22, 23%, which means they are comfortable and they can capture growth, which is why we like the private banks. Having said that, we also own the biggest PSU bank in our portfolio. And we like it. The results were fantastic of SBI. But incrementally, what we're seeing is in the private banks, we're seeing a comfort level in valuations in line with the public sector banks. But more importantly, the capital adequacy ratio is much more comfortable, which means they can grow before they come to the market to tap for more equity.
Vinay, at the outset, we must thank you for joining us in the day when, the match is going on. So thank you very much, for joining us today on the show. But you were talking about the banking space, just turning your attention to the FMCG pack. In that, you picked Tata Consumer. Could you tell us why?
Lots of reasons, apart from the fact that I like coffee. But what's really important is if you look at the way Tata Consumer and the new CEO, who's not new anymore, it's been a couple of years there, how he's made the food chain grow out there. If you go to Amazon.in and just put Tata Sampann, the number of products you'll get, which is really made FMCG ready foods, is amazing. The way the margins in the salt business is growing is great. The way Starbucks is, going to get a lot more profitable in the times to come. The number of outlets of Starbucks are still a trifle of what they are in China, and that's increasing. So you've got too many triggers on for Tata Consumer, which is leading to their growth rate in earnings to being between 15 to 20, 25%, much higher than most of the other FMCG names, which is why we like Tata Consumer.
Okay, Tata Consumer. Bharti, Vinay, what's your view there? I mean, actually, it's one of the few businesses where we are actually seeing earnings estimates moving higher.
That's right.
One of the very few sectors, right? Otherwise, even for sectors like banking, earnings are holding. I mean, autos, earnings are holding. They're not rising expectations. But here, they are rising. Your thoughts?
So I think perfect comment made by you, right? Our biggest concern for India are two. One was the currency, which I mentioned earlier, and second is the earnings trajectory. As inflation comes down, we'll start seeing earnings being cut by 4 to 5%. So, we won't be surprised if the Nifty EPS goes to even 810 levels 1 year forward. Having said that, as far as Bharti is concerned, Bharti has a three-pronged strategy. The first strategy is just as you keep on digitizing, as you use more and more of the data play, the traffic increases. So that's the first thing, make a consumer who use a lot more of gigabyte per day, per month. Second is you start moving to higher ARPU customers. So the same person who is using lesser in terms of data being given unlimited at a point of time would get charged. So, the ARPU times, the customer, you get the revenue pie increasing. And the third is increase the speed, move from 2G to 4G. They have a lot of 2G customers, and from 4G to 5G. So you give better speed, increase your usage, and charge a bit more. The ingredients of all this is higher revenues. Incrementally, if you see the last couple of quarters, the incremental margin which comes on incremental revenues for Bharti is way above their 40%. It's closer to 60 to 70% because their variable costs are limited and fixed costs, don't have more costs coming in incrementally, which means that, their margins will improve. And that's why as you have your EBITDA increasing, your bottom line increases a lot more further. So we are very positive, Bharti, as well.
All right, very quickly, Vinay, you have also highlighted that credit card spends are picking up, a quick question is with regard to, do you play this theme via the only listed credit card company or via the banking space?
You can do both. So, you can play this game by the credit card company listed place as well as the banking space. Lots of the private banks, Kotak in particular, do not have their listing and they own 100% of it, ditto as well as ICICI. So technically you can play this theme of credit cards by using the private banks, which we like. HDFC is a leader in the credit card space in India. It had some hiccups, but it's back, and we like that company as well.
Vinay, thank you very much for your time. It's a pleasure as always, and a great chat. Thank you very much.
Appreciate your time.
Well, that's Vinay Jaisingh with his thoughts. The market, by the way, has come up as well. Look at the Nifty. We are down 135 points. 18,022 is where we are at. And it's a sharp recovery, which we've seen on the index, on the Nifty benchmark index.
Quite tying in with what we're seeing in the match, right? I just wonder if you have a way to assess the price action of the volumes in the last 30 minutes. Perhaps this up move is coming in on tick by tick, lower volumes, because everyone's watching the match.
It's been terrific, right? I mean, last 3 overs actually, just terrific. And now actually we've got a really defendable, good score. Absolutely, absolutely. So quite incredible. We'll take a quick commercial break here. We've got more cricket conversation lined up, by the way, as well, with our sports editor, Network 18 sports editor, in a bit from now. And of course, we'll get you market conversation as well. What to buy today for reverse trade tomorrow. That also with our technical experts in just a bit from now. All right, the market is down 135 points, and which is far better than where prices were when we started at 230. It was 170, 180 odd point crack, and that's recovered quite a bit. Midesh is with us to run us through BTST trades. Midesh, what do you have?
I have 2 buy calls, Prashant. Some recovery being seen, and some stocks have actually moved very nicely in the last 1 hour or so. So Hero Motors is one of them. That's a BTST with a stop bid of 26.90 for targets of 27.45. And HDFC Bank is the other one. That's a BTST with a stop bid of 15.14 for targets of 15.35.
Okay, all right, Mitesh. Thanks a lot for that. Well, but all eyes are on the ongoing T20 semi-finals game. And, India has just put up a score on the board. We have with us Mr. K. Srinivas Rao, Group Editor Sports at Network 18, who joins us. Hi, Srinivas. Thanks so much for coming down. Well, 169 is what we have set. Do you think we've got enough? At one point of time, 169 as well was looking a far cry. But Hardik came in there and played the long handle. What's your take?
Yeah, so if you look at the first 15 overs and where kind of India reached, it was impossible to say whether they would reach this kind of a total or not. But now that they have, you always can say that they are 15 to 20 runs less. All due credit to Hardik Pandya for, for the last 5 overs. And I think if at all India backs this game, it's because of the last 5 overs and what Pandya has managed to put on the table there. Which again, brings a lot of fears to the fore, but I'll keep that for later. Right now, so far, the innings belongs to Hardik Pandya.
For us to defend this total, but Srinivas, someone is going to have to bowl that crucial, 4 overs. Well, who would you throw the ball to?
Arshdeep. I mean,
I'm
really looking for at those 4 overs from Arshdeep, and I'm looking at for the kind of wicket that this is. It's quite a batsman's wicket. I mean, the confidence with Josh Butler, won the toss and said he'll bat second. And Rohit Sharma, when he was asked, Rohit immediately said that I would have done the same, had I won the toss, which is batting second. And I can tell you that chasing on this track, chasing this kind of a total is going to be far relatively easy. So India's got to be really on their toes. So Arshdeep, yes, I mean, considering the way he's gone about in this tournament so far, but overall, this entire Indian attack will have to come alive today. And I think the spinners have been blowing a bit cold lately. I mean, I've yet to see, Ashwin or even Aksar for that matter, like kind of come and deliver what was expected of them. Now, the team has resisted keeping Chahal out of this attack, and your best spinner is not part of your playing 11. You've gone ahead and opted for guys who you thought could probably help you a bit with the bat. It did not come to it, and I now hope that, whatever you expected them to do with the ball, it all comes around today.
Truly right, the way you put it, right? At 135, 140, we were hoping you get to 170, 180. Now that we're there, the feeling is maybe 20, 25 more. And
you always have that feeling.
Always. First couple of wickets, I mean, if you're able to grab quickly, put them under pressure, I mean, that's the most kind of desirable outcome, isn't it?
Of course.
Quick wickets.
Of course. Yeah, of course. Quick wickets. That's the only thing that's going to keep you in the game. You get Josh Butler early. The good thing is Malan is out of this game, so David Malan is not there. So you get a couple of wickets early, and that's how you stay in the game. I mean, that's it. The first 5 to 7 overs are going to be like hugely telling in terms of what kind of a start England gets, and in that lies the whole answer. So. Yeah, I mean, it depends on how India start. And I honestly, this team has the attack. It's got the experience. It's got quite a bit of, a variety. Like Hardik can come, hit the deck, consistently hit the deck. He's got the bounce. There are some. It's a very it's a young squad. I mean, yes, I have been a little wary of the fielding efforts that this side has put in, but no, on a given day they can really pull up their socks. We know it. So here's a team that can actually pull it off. Let's see what Ashwin has got here. Those 4 overs are extremely important for me, and my eyes are going to be on what Ashwin can do. Here is a man who's been there, done that as a senior guy. Time and again we have had this debate on whether Ashwin should be in the 11, should not be in the 11. Today's the day. You know what I'm saying? Today's the day to just bring out all the cards on the table.
Yeah, so Arshdeep will be playing a crucial role. As you said, he's seaming the ball around. Yeah. Ashwin needs to come in his own. But what about the other two? Shami as well as Bhuvi, they need to blow, bowl it in the right place. Because at times you've seen that Bhuvi as well has been a little off color. Let's hope that today is the day.
Bhuvi's been off color, but again, Bhuvi's been like, kind of, I mean, Bhuvi on his day has still been a very, very good T20 bowler. Among the options that we've had, I've rated Chahar and Bhuvi on the same pedestal. Like, both on and off have been, decent hands in bowling hands in the T20 format. My eyes, as I said, again, I'm like emphasizing on this, my eyes exactly are on those 8 overs that belong to the spinners here. Yeah. Now, what kind of overs is Rohit going to rotate between Aksar and Ashwin? How exactly is he going to do that in the middle overs? It's going to have a telling effect on how England chases this total.
Okay, all right. Thanks so much, Srinivas, for joining us. I just hope, you said that we're 15 runs short. I hope you're wrong. Because I'm just hoping that this is enough. I was hoping for around 170 odd midway through, and we've got there. But let's hope that, the boys deliver and we manage to defend this target. Good speaking to you.
Right.
Well, back to you guys.
All right, absolutely. I mean, great chat there, Srinivas. Thanks very much for that. By the way, the market, just to keep an eye on that as well, because it's recovering. It's recovering quite a bit. Let me tell you exactly what has happened since we started the program. Because a lot of movement has come through. At 2:30 when we started, the Nifty was at about 17,984. We're at about 18,030. So it's a 40 or 5 odd point bounce that we've seen on the index from the low point where we found ourselves between 2 and 2:30 or so. Now,
and it's a lot to do with private sector banks. So pull up the intraday chart of Kotak Mahindra Bank. The other one is HDFC Bank and ICICI Bank too. Kotak Mahindra Bank and HDFC Bank are back in the green but ICICI Bank is on the verge of getting back into the green. So a lot of the recovery that we've seen post 3 p.m. And I guess it's got to do with the expiry factor as well, because this is the weekly options expiry.
No, absolutely. I mean, actually, you're absolutely right, Rima. The Nifty Private Index, the bank index will show you that resembling the moves that HDFC Bank, etc., are showing sharp bounce. I mean, almost a bottom at about 230 and then a bounce post that. That's the chart which is important. All right, Tata Motors is surging in trade after reporting what was basically a weak set of earnings. The stock will come up on your screen. So it's a 4-5% cut now. Sonia is here with what the street is making of the numbers and what it means for the stock from here out. Sonia, over to you.
Well, thanks a lot for that. There's definitely a miss, right, on the numbers and the fact that the debt for the company has gone up. So Tata Motors is under quite a bit of pressure. Motilal Oswal says it's an all-round miss. They've cut their EPS estimates for FY23 to a loss versus a profit earlier round. They say that they have a buy with a target price of 500 rupees. Now, HDFC Securities maintains a reduce with a target price of 415. They say that the increase in the debt is really a big concern, and now it may look challenging for the management to meet their net debt-free target by FY24. Phillip Capital is a bit more optimistic. They say that the risks are transient in nature and the stock offers a great risk reward at current levels. They maintain a buy with a target price of 530. JP Morgan has a neutral. They've cut the target price to 410. They cut the FY23 to 25 EBITDA estimates as well. And they say the India business has disappointed this time around and the management has cut their guidance for JLR too. CLSA hasn't outperformed. They've in fact raised their target price to 491. They said that Jaguar Land Rover has performed better than India business in Q2. So all round, disappointment coming in there, and the higher debt is a big concern. Back to you.
Sonia, thank you very much for that. Market expert Ambarish Baliga is with us on the show. Ambarish, Tata Motors was once the darling of all investors, the perfect play to, track the increasing dominance it has in the domestic electric vehicle portfolio, more than an 80% market share. But now there are so many concerns, as Sonia pointed out. The free cash flow guidance has been brought down. The debt has increased. Investors are now increasingly concerned whether the company will be able to achieve their FY25 guidance of being net debt positive, and plus, of course, global slowdown concerns given its exposure to Europe and China. How do you approach Tata Motors now?
Yeah, Rima, I mean, whatever you said clearly shows that whatever expectations were there in the market about the sort of debt freeze, sort of a situation, I think that gets postponed by about a year from whatever I can make out from the sort of numbers which have come. And I think that again gives us an opportunity to buy something like Tata Motors possibly at lower levels. Because of these earnings, we've already seen a cut. We could possibly see another 5 to 7% sort of a cut from here. So I think at levels of closer to 380, I think it becomes a good buy if someone has patience for about 12 to 15 months. I think we should see levels of about, like more than 500. I mean, I have a price target of 540. So, but then it requires patience.
Okay, all right. Hi, Amrish. Good afternoon. Good to speak to you after a while. Well, just before we come to you, Amrish, I just want to point out two stocks, the HDFC twins. HDFC and HDFC Bank. This entire move that you've seen on the Nifty has been actually come because of both these two names. So even the Nifty Bank has seen a good recovery because HDFC Bank has a big weightage out there. The intraday charts of both these two should come off you. I just want to point that out, and that explains why we had a bit of a 3 p.m. move out there. But Amrish, normally when you join in, you have a stock that you'd like to talk about. Which one is that today?
Today's stock is a small one. It's IRFC. I mean, this is in line with the interest which is there in the PSU space, especially railways and the BFSI related. So IRFC primarily lends to railways where there's a clear visibility of capex growing, though they also have an enabling resolution now to lend to other infra projects. The railway capex, like I said, it's the highest till date. It's about 2,45,000 crores this year, which is 14% higher than last year. And IRFC has a very simple model. It earns 35 to 40 bips over the cost of borrowing. And there's absolutely no risk of NPAs. NPAs are zero. In FY22, the profits rose to about 6,000 odd crores, which was an increase of about 38% over FY21. Although we saw that disbursements have reduced last year, but the assets under management stood at about 4.32 lakh crores. So this AUM has been growing at about 27% CAGR in the last 3 years. And the icing on the cake clearly is the dividend policy, which is 30% of profits or 5% of net worth, whichever is higher. So now net worth stands at about 43,000 crores, whereas the market cap is about 32,000 crores, which itself works out to about 6.75% yield. So tomorrow is the board meeting and the dividend announcement. So clearly, I think there'll be something to cheer about. So my target for IRFC is about 32, which is a 20% discount to FY24 book value, expected book value of about 40.
Okay, the stock came listed in January of 2021 and debuted at about 25 rupees, and it's basically back there after almost 2 years now. So that's IRFC, which is Ambarish's pick. Now, Deepak Nitrite is trading lower. Margins in the quarter gone by slumped. Sonal is here. It's a well-tracked, well-traded name. Sonal, tell us more.
Well, very weak set of numbers from Deepak Nitrite, and it's the second consecutive quarter where the company has not been able to do well, and that's why the big disappointment. Revenues, they declined 17%, EBITDA declined 30% on a YOY basis to come in at 271 crore rupees. Margins were down almost 900 basis points, and profits also declined 31%. Part of it was also impacted because of the fire that they saw at one of their major capacity. In terms of segments, their advanced intermediates did well, growth both on a YOY and on a quarter-on-quarter basis in terms of EBIT and revenue for the company, but it was the phenolics division that did not do well, and that is one segment which the street and the management was very bullish on. Their revenues increased on a YOY basis. However, EBIT declined 55% on a YOY basis and 45% on a sequential basis, and this is the reason why the stock is sulking so much on trade today.
All right, thank you very much, Sonal, for that. Any thoughts, Ambarish, on Deepak Nitrite? Or any of these names where we're seeing some of these very outsized moves based on earnings. Piramal Enterprises, you look at, we discussed, of course, Tata Motors. You look at Auto Pharma, not earnings, but of course, the news flow. Anything which is on your radar, which you'd like to pick up after the price damage?
Stocks like Aurobindo Pharma or a Piramal, possibly I would ignore at this point of time, look at the earnings. But especially the specialty chemical pack, where I'm quite clear that India is finding its place in the sun. And I suppose the next couple of years, possibly this decade, is for India as well as specialty chemical space. And Deepak Nitrite, again, is a leader in their own vertical. So again, I would use these sort of earnings disappointment and the correction to in fact buy, because one would be buying for the next 5-6 years, if not more. So a fall to these levels, or maybe it can fall to levels of about 1850, 1900. I think that's a very good buying opportunity.
Ambarish, do stay on. Need to get into a break. When we return, we'll have the closing rates and a few market comments as well. Down day for the markets, but not for Nykaa. The stock is up 5.5%. Everyone thought, the stock perhaps would slump as the lock-in for the pre-IPO investors ends today, and there would be a lot of selling from the investors who've gotten in at much, much lower prices and are sitting in on handsome, gains. But look at the way the stock has reacted, up 5.5%. Today was also the ex-date for the 5:1 bonus. Ambarish, your thoughts on Nykaa? Pretty smart move, right?
Absolutely. I think it was a brilliant action by the promoter, although the investors may not like it because they have locked in the shares for a while longer by announcing a 5:1 bonus, and that too with the ex-date of today. So this clearly removes the liquidity. Basically what has happened is the share which was worth 1,080 yesterday is today worth 180 only. Because of the bonus shares, your price has come down, and the 5 bonus shares have still not hit your demat account. It will take a while longer. So any investor who was actually sitting on 100 crores worth of Nykaa yesterday and was thinking of selling can maximum sell 16 crores today. So automatically liquidity is out, and that's one of the reasons why the stock has not fallen. But just remember that the bonus shares hit their account, it would be up for sale.
Those who want to, their option opens up for them. Ambarish, it's a pleasure. Thank you very much for joining us and pressing their point on Nykaa. Thank you. All right, let's just take a quick look at the market as we approach market closing. We are, 3 minutes away, and the index is down 120 points, in far better shape as compared to where we were at 2:15, 2 o'clock, or even actually when we started at 2:30, where the cuts were larger. So the Nifty ending down with a 100-point loss. The Nifty private bank index is where bulk of the recovery happened. And of course, the HDFC twins, as we were talking about, led it. HDFC Bank and HDFC. It was not all positive for the private bank space. So Axis was down, for example. The Bajaj twins, both Finance and Bajaj Finserv were lower. But it was largely overwhelmed by the gains that we saw, incremental gains towards closing on the HDFC twins. Apart from them, Kotak did well. There was Hero MotoCorp, which was higher. ONGC was higher. And there was Bharti, which ended slightly higher as well. Losses coming through in, apart from Bajaj twins, Tata Motors and Mahindra. Titan was down, and there was Grasim, which was under pressure as well. Rima, in the broader space, I mean, a big down volume day, which at least I've not seen for some time now.
Absolutely. And the mid-caps, small caps underperforming. The index goes home with a cut of more than 1%. The advanced decline ratio well in favor of the losing side. 2 stocks in the green for 5 in the red. Talking about the big losers, Navneet Education fell in the last 13 minutes, stock lower by 13.5%. ITD Cementation, Deepak Nitrite's Piramal Enterprises on the back of its earnings. Ramco Cement losing ground for the third day in a row. A weakness seen in RITES, that stock down close to about 6.5%. On the gaining side, Gujarat Pipavav on the back of numbers. Godrej Properties higher by 5.5%. Recovery after the management seemed to indicate that Q2 was subdued. But given the launches, their FY23 guidance in terms of business bookings, etc., very much intact. Nykaa was up close to about 5% in trade, and Samvardhan also higher by 4%. Came out with numbers just about 10 minutes or so. Oberoi Realty, another stock we didn't mention, that was under concerns about some related party transaction and what the management wants to do. But there goes the closing bell. Nigel, we've slipped more than 100 points in the Nifty, but holding up above that 18,000 mark.
Well, that's right, Rima. Just to highlight a few more gainers today, you had Newland Laboratories that was flying away in reaction to its numbers. It's seen a sharp correction from the top. Today, it was up close to 20%. Link Pens was up in trade as well. And Sanghi Movers as well came out with a set of numbers. It was pretty good. So that stock as well went flying away. And TVS Sri Chakra, well, that stock as well was up close to 10%. On the flip side, a couple of stocks did get clonked back. Pyramid Pharma, on the con call, they said that they're looking at scaling up margins. For the time being, the street doesn't think so. So it came in for a bout of selling, was down 10%. ITD Cementation as well in reaction to its numbers was down 10%. And you had Everest Industries that was down more than 10% in trade today. So that's about today's market action, but we at least defended the 17,950 odd mark on a closing basis. So we'll wrap up on this edition of Closing Bell, but you stay with us because our Thursday special big deal comes up next.